Hey everybody, this is Ryan Mallory, and today we're going to talk about head and shoulders patterns. Yes, we're going to get in a little bit of technical analysis today. Been talking a lot about the stock market as a whole, sectors, what stocks to buy. Now I want to give you something a little bit more of a tool that you can work with going forward, and that is the head and shoulders pattern. You also have the exact opposite of it, and that's the inverse head and shoulders pattern. So what I want to do here is debunk some myths, give you some real practical advice regarding these trading patterns, because oftentimes they mark tops and bottoms in the stock market, or do they? That's what we're going to get into, and I'm going to give you some real life examples on how to deal with it. So a head and shoulders pattern is exactly what it sounds like. It's a pricing pattern that forms a silhouette of the human body. Now, the left shoulder goes up, comes back down, and then you get the head, and it goes even higher than the left shoulder and comes back down, usually around the same area that the left shoulder came back down to, and then it goes up a little bit more, but it doesn't go as high as the head did, and it comes back down, and then where it confirms is when it breaks the neckline, which is the lows that form the head, and then it goes down. Now you also have the inverse head and shoulders pattern, and all that is basically the head and shoulders pattern flipped upside down. It usually marks bottoms in the market, but it also can be in the middle of a trend, and it can also be at the top of a trend. That's why I want to go through some examples and debunk all the myths and the reality of these trading patterns for you. All right, the first example is going to be this S&P 500 SPY ETF. Now you have a left shoulder, a head, and a right shoulder. Now, some might even say that's a triple top where all the tops are equal, but it's not. If you look at the left shoulder, it's slightly below the head, which is slightly above the right shoulder. Now you have a clear neckline that goes right across, connecting the pattern and giving you a clear confirmation area. And then in August of 2015, the wheels completely come apart. You get the confirmation, you get the sell-off, you break the neckline, and you have a huge sell-off that lasts about 3-4 days. And ultimately, that time period was quite bearish for the market. Now look at BYND. Is this a head and shoulders pattern going back to 2017 and 2018? No, it's not, because the head is actually lower than the left and right shoulders. It is a topping pattern. What it is, I don't know, but it did confirm, and it went much, much lower, significantly lower. But if we're just talking about head and shoulders pattern, that's not one. If anything, I would probably say it's a distribution channel that had lasted many, many months before finally breaking to the downside. Now take a look at one of the stocks that has just been raging of late. It's a bankrupt Hertz. It's gone up like 400 or 500% in the last few days. Now, this one is actually a head and shoulders pattern forming on the 30-minute chart, and it has confirmed, believe it or not. You have your left shoulder, your head, and you have your right shoulder. Now, the right shoulder is not big. Now, that's okay, because the right shoulder and the left shoulder does not have to be symmetrical with each other. In fact, the right shoulder is oftentimes smaller than the left shoulder. So this is quite normal. But you have a neckline that goes across, and it confirmed today. Good chance this one's gonna go right back down, probably fill the gap. Now, a lot of times they'll tell you, you take the low of the right shoulder and subtract it from the high of the head, and that's your target price. What do I mean by that? It means you take the low, which is 265, subtract it from its high of 625, and you basically have a company that's going out of business because it's going to zero. But nonetheless, you get the point though. If the stock was trading at 100 and the low of the right shoulder was $90 and the head was at 120, that would be $30. It confirms at 90. You subtract the $30 off of the 90, and then all of a sudden you got a $60 price target. Easy as that. Now, I mentioned earlier, when we're in a raging bull market, head and shoulders patterns are not as reliable. So let's go back to 2019. There was an incredible head and shoulders pattern that momentarily confirmed, and that's what they like to do in these good, strong bull markets. They like to confirm for maybe like a day or two, suck the shorts in, and then go ripping higher, okay? Don't fall for that. But again, you have the left shoulder, the head, and then you have the right shoulder, all perfectly in place, confirmed with a break of the neckline. But what did it do? June 3rd, it just kept going higher. It broke above the head, and it just kept ripping higher the rest of the year. Now let's get into inverse head and shoulders patterns. You have a left shoulder in Tesla, you have a right shoulder in Tesla, and you have the head that's much lower than the left and the right shoulder. You have a neckline that goes across. What ended up happening? Well, I think we all know the story here. This was trading at like 245, 250, and it went crazy. All right, now not all inverse head and shoulders patterns are going to do this, okay? In fact, this is kind of like the exception, not the norm. In a raging bull market, it makes for a great trading pattern. And if you're playing bingo at home, that's probably the 17th time that I've said raging in this video. Now, I mentioned before, the inverse head and shoulders pattern does not have to happen at the bottom of a major sell-off. It can actually happen at the top or near the top, or even sometimes in between. Take the S&P 500 SPY ETF. You have a left shoulder, head, right shoulder. Consolidating at the highs, it can't really push beyond them. Every time it got to the highs, it kind of pulled back a little bit, but you do have this nice inverse head and shoulders pattern. And so what happened? You have a neckline, and eventually it confirmed. And we all know the rest of the story. It just kept on going higher. Now it goes from 302 all the way up to 341. So that was a $40 gain on the breakout to the upside. So that was more than a 10% move to the upside. Now, do you want to put your stop loss below the right shoulder? No, I don't think you really need to do that. I think once you see that it's breaking out here, you want to just follow this trend line higher so you can put the stop loss below a recent low and then try to find a moving average that it's holding. So as it's moving higher, you can see this 10-day moving average is holding up really well. You keep increasing the stop loss following this 10-day moving average, and then when it finally breaks, you get out. Here's the inverse head and shoulders pattern that happened actually off the lows of an existing trend line. This is the 1 hour chart of the SPY. Left shoulder, head, right shoulder, neckline going across. What happens thereafter? It breaks out to the upside and puts together a very, very nice return for the ETF. Now, one thing to be wary of is if you're short on the market and you're on the 5-minute chart and you see these heavy sell-offs followed by an inverse head and shoulders pattern, for years now, they have always been trouble. Not 100% of the time, but I would say a good 80% of the time, these inverse head and shoulders patterns are a problem. Left shoulder, head, right shoulder. You can see here, this happened on May 29th. It rips from there on after. We're way past this at this point. But this was a signal, one of the most recent lows, signaling a great opportunity to get long on the market. Here's where that signal happened at, right here. This is what it's done ever since. Incredible run. Check this out. As I'm doing this video right now, there's a head and shoulders pattern forming on the S&P 500. Left shoulder, head, right shoulder, neckline. Has it confirmed yet? Kind of. It kind of did. It had a momentary move below the neckline, but as we can see, it wasn't enough to drive the market down, fill the gap from last week. That's still open, but the chart is still valid. Why? Because it hasn't broken back above the right shoulder yet. It got very close following the FOMC statement. Could not put it all together. This is still a valid pattern. How it plays out, I'm not sure. Dude, check out BYND. This was at a time when the world thought we were gonna just turn into a bunch of vegetarians and ban cow farts. The stock had gone from like $43 at its IPO all the way up to like $220, man. It was crazy, right? But you have this left shoulder, head, and then a very muted right shoulder, but still a right shoulder. And you have this neckline that's going right across here. I love this chart because it's a perfect head and shoulders pattern that left a lot of longs, bag holders on this trade. And who do you think the bag holders were? It was retail traders. That's why I keep preaching to you guys. You got to be careful as retail traders. The banks will get you if you do not practice risk management. Look at this. Huge support level. You think it's going to hold? No. Look at this thing. Way down. I mean, it took a pummeling. And you see it so much with these very trendy stocks. These trendy stocks get destroyed time and time again. You'll always see that. When you get the herd, when you get the crowd in there, when you get the Robinhood traders, man, they pull the rug out from underneath you and they destroy you. And that's why I always tell you, use stop losses. If you don't, you're going to lose. Here's an inverse head and shoulders pattern. When I say that these patterns can be very messy, very choppy, and not be perfectly symmetrical, that's exactly what I'm saying here. Amazon, back in 2018, early 2019, left shoulder, head, right shoulder. Right shoulder's not symmetrical with the left shoulder is very choppy. There's multiple points there that you're dealing with. The head, very strong V-shaped pattern, not a rounded bottom. But here's your pattern here. This is your neckline going right across here. And what did it do? It confirmed and it ripped higher. I can give you guys these chart patterns for days and days and days. They happen all the time. You just got to get an eye for seeing them and then understand the kind of market that you're in. Check the market. If you're in a very weak market, that's not the time to be playing inverse head and shoulders patterns. Eventually, the inverse head and shoulders pattern will play out and it'll start working again because over time, the market does tend to go higher, but you got to be cognizant of the market. And remember, just because they draw it for you in a textbook, that doesn't mean that's how it plays out in real life. Real life is always different. Did everything they teach you in college or high school, is that how it played out in real life? No. In fact, it was hardly a representative example of how things were going to play out for you. So what I'm trying to say is when you look at what the textbook version of a head and shoulders or an inverse head and shoulders pattern is, or any pattern for a bull flag, triangle patterns, candle patterns, they're not representative of the market itself. Yes, there's variations to these patterns. They're not all textbooks. So you've got to take that into account. And sometimes you got to come up with your own price targets based on what the chart's telling you. Come up with your own stop losses, not necessarily put it below the right shoulder like the textbook will tell you to do. Put it in a place that makes sense from a support resistance standpoint, and that's not always going to line up with the right shoulder. So that's going to do it. If you have any questions, put them down into the comments box. I'd love to hear from you. I know some of you guys will disagree with how I define a head and shoulders pattern. Also, I'd encourage you to like and subscribe to my video. I appreciate it. I'm going to keep putting these things out there for you. I'm going to teach you. I'm going to help you, and we're going to conquer this market together. Thank you. God bless.